Hey everybody, it's Brett with a weekly recap. I haven't talked to you guys in a little while, but wanted to give you some insight into what's happening in the world of Bitcoin and crypto. So let's dive right in. Pulled up some news here. This is interesting too from today. Bitcoin ETF approval tipped to be a sell the news event. People have been talking about this as saying maybe it will be, maybe it won't be. Not going to take this at face value. What is interesting here is that this is a level that we've identified previously of where we think it could go, and 32,000 would be a great spot, a great support area for Bitcoin to come down to. Now that would certainly shake out a lot of people. Personally, I think we come down to around 38K and then get a bounce, maybe up to the golden pocket. We'll look at that, but it's certainly possible we could go down to 32K. We've really come up a long way. So this person, Crypto Quant, also saying that there's evidence of that on the on-chain metrics. So this is interesting. It's worth noting about, and just putting that in the back of our mind. I won't go into these charts here and on-chain metrics, Glassnode, etc. But let's use that as a little bit of a framework to dive right in. I do want to talk more about the overall market and crypto and Bitcoin in general. And so this is interesting too. I did a study here just showing, and this is a couple weeks old actually, that likely we should have, here's that 32K support. It would be normal for us to have a 27% or so retracement back to that 32K support area. Why? Well, we've done that before in all of these bear market pushes. So back here from, September of 2022, we saw a pullback of 30% into the lower edge of this upward trending channel. I like to create and draw these trend channels. This is one of the innovations, or not really an innovation, but one of the new things I've started doing in this market. Really find that helpful because once these things find a new trend channel direction, they do tend to move within those boundaries, and you can play around with that on your own to see that. Here also we saw this come up to this level, 23% correction. Here we went sideways for a bit and then came down 20% to the lower edge of the trend channel. But here, since we've pushed up to the top here, I've had this drawn, and the lower highs have been indicating for, I'd say 2 weeks now that we should head lower. So a 27% pullback here would not be abnormal, down to this 32K support level, potentially 30,000. But that was, we have to remember that was a pretty significant resistance area, rejected here, and sort of in this rejection zone. They're not always exact levels. They can be support zones, they can be resistance zones. So just keep that in mind. But finally, we broke above that 32K level. We haven't retested it. And one of the things that I want to talk to you about here that I've been talking to my students about, and I can't say this, I invented this, but I noticed a long time ago that often on these big, large candles, some people call them vector candles, almost always they come back to retest that midpoint. So here we have the midpoint right around 32K, which again was this resistance level here, flipped up, hasn't retested as support. So if we do come down, we've already come down a bit, but even from these levels here, down to that 32K level, about 25% lower. So be aware of that. That could be incoming. Reminding you that we pushed up, quite high here. We went up 75% from the lower edge of that trend channel. Now, the good news is, and what we want to watch for, is the next bounce. So if you wanted to get into some cash and sell some of the holdings that you had, not financial advice, but if you have, to have some powder dry, if we come down to these levels and start buying around here, ideally you're using some other oscillators, whether it's, the MACD, RSI, or ours at, which we have at, some of our services there. I'm not here to talk about that, but we have our own indicators we watch. And essentially to retest this, the resistance flipped as support. So this 32K level, certainly in the cards. I'll show you the other scenario where we could go to 38K also. But just be aware of that. Okay, so let's take a look at some other interesting things here. I did make this study last week, and this is a projection on the Pi cycle top, and just in terms of what we should be watching for. We have our own indicators also that we use for catching the market top, but I use standard indicators also. So I nailed the market top, told people to get into cash in December of 2021, and January of 2022 was pounding the table, get out of these markets. That was partially on the monthly MACD, but also the Pi cycle top had triggered. So when you look at this, just keep in mind, this is a graphic here. I'm projecting where the next Pi cycle top could be. This is a free indicator you can get in TradingView, but what's interesting is it's called every top in the past market cycle top. So back here in 2013, and then it sort of had a dual cycle here. I want to talk about that a little bit more in a minute, and why we could potentially have that in this cycle. So hold on, we're gonna stay around. We're gonna talk about that. The pi cycle top triggered again. What it means though is that right here in 2013, the pi cycle top is when these two lines cross, and essentially there are two moving averages. One is a variation of that. It's I won't go into the math behind it, but a slower and a longer term moving average that had some unique properties to it when these cross, and typically that is the pi cycle top. So you can find these indicators on TradingView. Again, one of them will put the label on it. So when I saw this, by the way, and then we saw it here at the top of 2017, we saw it here at the top of 2021. Now you might be saying, but that wasn't the peak, that wasn't the top. Actually, it was. I think that this was the top. And when I saw this crossing, I know better than to question proven indicators, but as everybody was, we were all bought into the 100K narrative. So I saw this trigger, I thought this can't be right. Pi cycle top is broken because we're going to 100K, and then it pulled back and started pushing higher, and this fooled everybody because we all thought, okay, here we go, we're going to 100K. What this really was the Wyckoff pattern, the upthrust after distribution. So this is the bull market, the sort of the bear bull market rally. The fake rally is a bull trap. So this was the top. This was a bull trap as it pushed just a little bit higher than the prior high, but the pi cycle top nailed it right in here. Okay, so the point is, if the pi cycle top is still unbeaten, where could it land on the next one? Now, I've been saying and given targets on the next bull run where we could go to 100K, 155K, 210K, and my Fibonacci's and everything show that. However, we have to be always aware of our own confirmation bias. There's another study out there that's fairly compelling. I won't show it today, that shows 80K. Only 80K will be the next top. So bear with me here. Now, if we look at this here, and this was just a projection, if I just sort of draw this out, these turn slowly and the orange one turns faster, it could put us right around in here. It could be around 80K. If what we would need is the price to push up faster, much faster, which is also something I've been outlining, and I actually think we do that, because that would turn this kind of in this upswing like we saw back here, making the pi cycle top later and higher. So this again is a graphic. This is a study I did on TradingView, and you can follow along there if you want to look me up there. You can just hit this button here, and over time we'll see what happens if I was right. So with that in mind, let's keep going here. I'll come back to the DXY because I think I want to get to this here on that similar topic. So this is my path to 155K Bitcoin. So now we have 10 reasons why this could go. And again, I liken this to each one being a small smoldering campfire. And like any good California forest fire, it just, when a couple of smaller ones get together, that's when it really explodes. Not that there's anything good about the forest fires in California, but as an analogy, let's take a look at this. Because now we have 10. Originally we started with about 5. Now we have 10 of these. So the potential path to Bitcoin, 155,000 in higher in 2024. And if you just visually look at this, this here is the exact bars pattern from the prior cycle. So this is not outside the realm of possibility. As far as I know, I'm the first to do this and draw this. I've seen some other people starting to do it now. But isn't it interesting, if I just move this with blow off top off to the side, that if we overlay that, and I'm going to come back to this, the reasons how we get there, but doesn't it look almost exactly, it's riding this up. We have this little pullback, and I think we would pull back at the old high around 70,000, push up to that 100K level that everyone wants to see us get to, thought we would get there in the last cycle. And if we do, it'll be a sell. That 100K will be a sell event, no question. So I think we pull back, we retest 70,000, would make perfect sense, and then we break up above 100,000 up into this $155,000 range. Now, why is that possible? That would be the 2.618 Fibonacci extension. These are not causal, but there is a high correlation, the Fibonacci sequence in nature, etc. And largely it's self-fulfilling. But from the last cycle high to the low, and just dragging this out, we can see the 1.618, the 2.618, and the 3.618. Now, the 3.618 is interesting because that's exactly was the top on the last cycle. If we go from the 2017 high down to the low here back in 2018 and we extend that out, isn't that interesting that the 3.618 was the exact top? I have misdrawn this a little bit. If we get it exact here, it's just right in that topping region. and that's significant. So right here, okay, it's not, it doesn't mean it has to happen again, but it's certainly interesting that that happened before, and so we'll come back to this, and certainly with this kind of with this blow off type of move here, we could get up to that 3.618 level, which would again be the 210,000, and there's other evidence for that I've drawn. I won't go into it today, but in terms of the macro bull flag that we've had recently going on, that also puts us exactly at 210,000, and so it doesn't mean it has to happen, but it's worth knowing about. All right, let's cover these 10 things again. So the 10 factors that could get us there. In this scenario one would be BlackRock, of course, the ETFs. Now, the article we started the video was about a sell the news event, so we have to kind of weigh that. I think initially we could see sell the news on the ETF approvals, but then I think the money really starts to flow in. And again, if any one of these smoldering campfires ignites, it could ignite all of them, right? Because they're all going to want to get into Bitcoin. So let me run through this real quick. I think you'll find these interesting. By the way, if you like the content, go ahead and hit the like button, subscribe to the channel. We'll be doing more of these in 2024 here with Max and I. And so the first low one is BlackRock at Fidelity ETFs, approvals pending. Experts are giving this a 95% chance. Kathy Wood, other people, Mark Yusko thinks only BlackRock will get it. I don't know. That's not the signaling they're showing right now. Lots of meetings with all these other potential ETFs. So I think these do roll out in early January 8th to the 10th. It might just come as early as the 10th, maybe even earlier. So button your chin straps, folks. This could be a bumpy ride and get volatile quickly. What else do we have? So QE money printing to pay down the U.S. debt and the re-elections. So, QE money printing has already been happening, and we haven't seen it because, and you can look this up online, I won't go into it, but they've been pumping money into the economy. And what we know from the COVID area and even prior, market cycles, when the Fed is pumping money into the economy, it goes into risk on assets like tech stocks, like crypto. And so we have largely probably has been fueling this all along. Really, they need to prop up the economy to cover our own deficit. So, the pay down our own U.S. debt. If you want a sobering website to visit, go to usdebtclock.org, and it shows how the debt is just spinning and the interest is spinning and all the things we're paying for is out of control. And also the re-election. They're going to keep pumping money into this economy to keep the economy high, to keep the stock market high going into this next election cycle, because as we know, good stock market, good economy gets people elected and reelected, even though that may not be the true picture. Number 3, bank failures. We continue to have bank failures. There was a smaller regional bank that failed several months ago, and they may continue. I think that that's going to continue to happen because what happened back in the 2018. And even after the COVID crash, especially, the Fed came out and said, we're going to give you really low interest rate Fed money to borrow to the banks, and you can bid it out at a little higher, and we promise we won't raise the Fed funds rate. Well, certainly they did. So these banks have all these loans that they've put out that they're now underwater on. They're unrealized losses, but nonetheless, they at some point will crater more of these regional banks, and that may be by design. We don't know, but we do know that Janet Yellen said that the non-systemic banks are not going to be saved. So more bank failures will cause bank runs and more people putting money in truly scarce assets like Bitcoin. That's number 3. Number 4, hyperinflation, de-dollarization. The BRICS deals, we know that's been kind of quiet lately. Again, a smoldering campfire, but BRICS stands for Brazil, Russia, India, China, and South Africa. There are more countries joining BRICS, which means they are no longer wanting to use the US dollar to buy oil and energy. So less demand, greater supply causes hyperinflation. So that's number 4. We're not even number 5, not even at number 5 yet. Number 5 is corporate accumulation. MicroStrategy just bought an additional $1.2 billion in Bitcoin in the last 60 days. They did a $600 million buy last month, and they floated a common stock offering of their own stock to buy another $600 million, and they had said they'd buy $750 million. Ironically, Michael bought at the local high again, and so we're pulling back here, which I was forecasting for a while. But at any rate, he's not in it for the short game. But it's only a matter of time before other companies come in and say, look, we don't want to be left standing, the last person standing. I just posted something on Facebook showing how and stating if and when Bitcoin goes to $1 million Bitcoin, Michael Saylor becomes the richest man in the world. Because doing the math on this, maybe I will pull that up. It shows that he owns 24% of MicroStrategy. So at 456 billion on the value of Bitcoin based on what they own, the math works out. And even if it's only 500,000. I think 500,000 certainly in the cards, for the next high in Bitcoin. So let me just move this over. This is my Facebook. There's a little picture of me at my trading desk. Let's see. This is it. So MicroStrategy holds 189,000 Bitcoin worth 8.11 billion. If Bitcoin hits $1 million, then Michael Saylor becomes the richest in the world. And the math on that's, I won't go into it, but here there's an article about the 24% that MicroStrategy is what I call him, Michael Saylor, MicroStrategy. It's easier just to call it MicroStrategy. He's the founder. He has super majority rights, cannot be voted out, so he's in it to win it. 24% ownership, so 24% of 456, of 8.1 billion. Then it works out to 456 billion. And if you cut it in half, if Bitcoin only hits 500,000. Many experts agree that certainly can happen, if not this cycle or the next. Then let's cut that in half, 225 billion. He's now worth more than Elon Musk. So worth thinking about. I think that'll happen. You heard it here first, and we'll see. Michael's a smart guy. All right, where are we at here? I want to finish this and jump over back to the DXY and kind of go fast here. And basically, that's corporate accumulation. So how long until Apple and Tesla and all these other companies start trying to get in? It's the old musical chairs scenario. Nobody wants to be last, okay? And even El Salvador is now up 300 million in their early buys that people were laughing at and scoffing at. So that brings us to number 6, country accumulation as the reserve currency. More countries will adopt Bitcoin as their reserve currency. It's only a matter of time. El Salvador was first. Other countries like Nicaragua, which has terrible currency, could solve that with a truly scarce asset. Saylor even said Turkey should do the same, and other mid-America countries are considering that, I'm hearing. So we'll see what happens. I think we'll see more of those. So it's just more demand, and we're going to talk about this in the leg number 7, is the lower supply. So post-halving, think about this. Currently, miners sell $12 billion in Bitcoin every year. After the halving, there will be half as many available to mine because of the economics of that. The hash rate is cut in half, and so there will only be 6 billion. Let's just do rough math. The selling pressure will go from 12 billion a year to 6 billion because there's less Bitcoin to mine. Okay, so that's going to reduce supply as demand is going up. We've never seen this before. Number 8, less supply, increasing demand shocks. That's what we were just talking about, all the above. So less available supply, increasing demand. Certainly there's a demand shock happening, and there's really only about 5 million Bitcoin in play. 5 million are lost. A lot is hodled and isn't being traded. So the exchanges are running out of Bitcoin. Smaller buys, sending it higher. Number 9, political support in favor of Bitcoin. We're seeing more and more of that. Senator Loomis doing great things out in her state of Wyoming, where they are burning oil. They've negated the argument that it's bad for the environment. Why? They're burning oil, they're mining oil, they're taking the ethanol byproduct that would normally go in the atmosphere, they're capturing it, they're burning it to power Bitcoin miners, so it's a carbon neutral footprint. Think about that. Genius. And more crypto-friendly politicians are starting to come out and say that they're pro-Bitcoin, and I think that's going to continue. So number 10 is bursting of the sovereign debt bubble. We haven't seen that happen yet. All these countries across the world, a ton of debt was taken on in the COVID crash, and so to keep the economy going, it's a global debt bubble. So, what's Larry Fink came on and said recently on CNBC, he thinks we'll see a flight to quality into crypto. Now, he didn't say Bitcoin. It was interesting. He said into crypto. What he meant was Bitcoin and Ethereum. What's also interesting is once the Bitcoin ETFs are approved, I think we see a massive run in Ethereum because likely BlackRock will be first in line to launch an ETF in Ethereum. So anyway, this is the path to 150,000. Let's jump back to the DXY. We're getting a bit of a bounce on the DXY here at the $100 level, which I forecast last week to our private members, and said that we Likely we'll see a bounce in the DXY and a pullback in Bitcoin. So, look at these levels here. It would certainly make sense after these big drops. And just looking at this here, after this big drop, that the DXY, let me just pull up a bars pattern and we can see, although you can visualize it, but if we do this and we overlay that to this kind of thing, we could see this same kind of a scenario. Push up to the top here of that trend channel. As we know, DXY up, Bitcoin down. DXY down, Bitcoin up. So I think we have more downside in front of us on Bitcoin and crypto. So no surprise there. This is another look at the DXY. I just had outlined some different zones here. So we've been following this for a while and outlining this so you can see. And so this is, of course, is a DXY daily index crypto crash zone. If we were to push back up in here, that would be similar to back in the 2022 days. Unfortunately, we rejected here or coming back down and heading down toward, if we, once we do bounce, come down though below $100 on the DXY, I think we're in crypto super pump rally zone, and that could happen, as early as January, February, April, going into the halving. So we'll see. So that's the DXY, worth keeping an eye on that. Here's another look at it. I drew this a while ago, and this is played out. My squiggles here dropped, and so I think this will continue to drop, bounce. We'll get a bit of a pullback once we hit the 50K on the golden pocket on Bitcoin, or maybe it's 100K, but we get that bounce, that pullback, and then we resume as the DXY falls back. To double test that 100 level. So we'll see Bitcoin really flying and crypto really flying there, as I'm suggesting here. So let's keep going. And what else do we have here? So this is the weekly. This is a 5-day chart of Bitcoin. Same. If I pull up a weekly, I've had this on here for a while. On the daily chart, I am seeing this. I do expect a pullback here into this $38,000 range, mostly because of the 21-day or 21-week EMAs coming here. We'll look at a daily chart in a minute, but if we do look at a daily, it's just a little bit longer cycle, a little bit more noisy, but you can see that we're starting to do that. We're coming down lower highs. I think we do come down in this region around 38K, maybe 39K, and then push higher. Certainly, as we said in the beginning, though, 32K is on the table. Why? Because, again, we have that resistance level here, so it's really more like this. And, look, if it comes down to 32K, it gives us more momentum to push higher. So welcome that. Have some powder dry. Be ready for that. Okay, here's Ethereum. Chart looks pretty good in Ethereum. It has not been beat down like Bitcoin. This is a cup and handle here pattern. It's an oldie but goodie. And so you can see here, here's the cup here with some steam coming off the water. Here's the handle. Ethereum holding above the 2145 level and pushing higher. This is a cup and handle breakout, and it's continuing higher with the 21 to 50 week EMAs pushing higher. So I think ETH is going to continue on and just taking a little breather there. Let's see what else. This is the Bitcoin chart here, just showing you the golden pocket. That's Fibonacci retracement zone, which is the 618 to 65, if you want to see that. From the market cycle top back here to the bottom, it just basically says that we should push up. I think we do pull back here. I've had this drawn for about 2 weeks now, that we zigzag back into this buy zone. I'm thinking 38K, 39K, and then we push up to the Fibonacci golden pocket, pull back again, and then we push on up to 100K. So that's scenario one. But we could still see, if we had some news, if we have a huge sell the news, I just don't think that's going to happen. I think we see a bit of a pullback going to the BlackRock announcement. This pullback forecast is into the third week in January, so that would account for the sell the news event, and then we rocket higher, okay? And then we go to the fib golden pocket, like I said, usually touches that. Sometimes it goes sideways, but usually it pulls back a bit, and then we go higher. So that's what I'm suggesting here, guys. Just keep that in mind. I'd have some powder dry for that pullback back to around 38, 39K, and watch your signals for the bounce out of there. If it does continue lower, dollar cost average, not financial advice, educational purposes, but you get the idea. So is there anything else we want to look at here? I will just tell you more that if you would like to see more of these live classes on every Wednesday, we have a training. It's called our M3 Active Trader class, and you can learn more about that at moonstream.io/ unveils.com/max training. Max endorses this, and it's a great class. It's a weekly class with me. You can watch 2-hour webinar here that you can watch at a faster speed. We did sell this out, and we're closing it out on this Sunday for the new year. Okay, so you can learn more about that. You get access to me every day in a private Signal chat, and I'll just run through these quickly. You can learn more about it at moonstream.io/max training. Weekly live market class recommendations like we're doing here today. Direct access to me 24/7, a members only Signal group. I'm in there every day with commentary, not too much, just enough, the relevant information, charts, coin picks on occasion when they're relevant. We also do occasional videos, timely recorded market updates like these, and a private membership area with training videos and tools you get included, including our crypto mastery trading indicators, which is the backbone of what we do and really have given us the edge. And those are amazing, that are developed by our quant engineer partner. Let's see. So that's this crypto mastery indicators. That's $4,000 value. Anyway, I'm not going to go through all this. You can read about it. We have a radar indicator. We have beginner live classes every Tuesdays with those indicators, and lots of bonuses, templates, high probability trade setups, and candlestick patterns. You also get a free 1-hour private trading session with me with this through Sundays. So anyway, not to make this into a commercial, just want to let you know some people have been reaching out wanting some help, and that's what we have access for you. And that's not anywhere near this. We have a monthly rate that's very affordable, and for under $300 you can get access to that. So you can read more about that here. My background, if you don't already know that, but I'm not here to give you a long sales pitch. Just wanted to make sure you knew that that is available, and you can go to moonstream.io/max training. Watch this webinar presentation, and it'll go through all of it, and including my background, etc., if you'd like to see that. Okay, but more importantly, if you like the content here, go ahead and like this video and subscribe to the channel, and that's what I wanted to leave you with. So hopefully that was useful, and I enjoyed sharing this with you. I hope you guys have a great New Year's, and looking forward to a very bullish 2024. Take care, everybody. I'll see you.